Sachs. Now, there was a target raise on their future price by UBS. They raised their target to $285. Now, I always take these target raises with a grain of salt because, I have no idea why they said 285. Why not 286? Why not 280? It seems too subjective to me. I know that they do a lot of research. They break down all the fundamentals. They look at the balance sheet. They look at the cash flows. They look at the future opportunities based on, future policies in the industry. But the point being is that it just still seems too subjective to me. So what I do is I take a look at what the stock's been doing. That's where I use the charts. And then I take a look at the options marketplace because they use pretty sophisticated formulas in their pricing to anticipate where stock could be trading into the future. That's that implied component of an option. So let's take a look at Goldman Sachs. Goldman Sachs is trading right now, ticker symbol GS, at $245.46. It is up $4 and roughly 15 cents on this news, a 1.7% pop. Now, the options for the next 7 days are pricing in that the stock could be in a range of either up $7 or down $7. That's for the next 7 days. So you could see it at 252 or you could see it at 238. Over the next 14 days, the options are pricing in an $11 range. Basically seeing it at 256 or you could see it at 234 because it's about 1156 is the 14-day. Then the options that are looking out 6 months in June, 161 days out. They're pricing in a range of being either up or down $36. That gets you right at that 280 mark, and it gets you to the upside, and it gets you down to as low as 211. So you see that the options are pricing in the potential for this range. Now, being able to see that, understand that now, utilizing the options, we'd say, well, how does that fit or rank right now as far as are these violent anticipated moves? Is this just in line and everyone's happy with the current trend and that this forecast could continue to the upside? Well, that's implied volatility. And the rank right now comes in at 50% for the last 52 weeks. That's telling you that there is a heightened sense. It's mid-ground between 0 and 100. So it's right in the middle. There is a heightened sense that there could be some violent moves in this financial stock. Now, what are the areas that you're going to want to watch? Now, the stock's trading at 245. It's been trending to the upside with all its financial brethren. But where are the areas that you want to watch as far as price action is concerned where the bulls might get nervous? The first level is going to be at 241.10. That's the 20-day moving average. That's what I call the trend moving average. That gives me an idea on the short-term basis where the stock has been, where the stock is going, and how comfortable the market, the environment is with its current trend. And right now with the stock trading basically about $4 above that moving average, it's pretty confident. Now, if you're not a bull or you are bullish but you haven't got in because you're seeing this stock right now at basically 5% off a 52-week high, that's prudent. You're going to want to see a little bit of a pullback here if you're going to get into this stock. A break between 241, yes, that will put in question the short-term trend, but the next level you're going to want to watch is 218. And again, 218 almost falls directly into that 6-month range to the downside. Pretty efficient pricing, isn't it? That happens to also be the 50-day moving average. That's the institutional moving average. A break of Goldman Sachs below 218, that's going to question not only the trend, but it's going to question the conviction of institutions in this stock. That's an area where you watch it closely. A break at 241 is an opportunity. An opportunity not only for you, but for institutions to look at the stock. And then a break of 174, well, that would be an overall break of its long-term trend over the last 200 days. Now, the probability over the next year of Goldman Sachs being above in January of 2018, we'll look at it over a year, the probability of it being over $280 at that period of time, in other words, 12 months from now, is right now 27%. 27%. That's what the probability of that price target, actually the probability of their price target at UBS is 25%. So this really tells you why we talk a lot about utilizing, if you own stock, sell maybe an upside call against it to generate some income. Because the probability that it's going to reach this target over the next 12 months is less than 30%. It's actually less than 25%. So that's why we want to bring these averages, these lines, these ranges into light, because that transparency allows you to think about risk management. It thinks about size management. If I were to buy Goldman Sachs right here, it's 5% off its 52-week high. The probability that it's going to pull back is 50-50 from this level. But if it pulls back and goes below 241, that's an opportunity if I'm looking at Goldman Sachs. If I start getting bearish, I'm going to get bearish if it starts trading at 240, 230, 220. Once it gets below there, then I could be potentially having a total trend shift. The next stock I want to take a look at has been a darling in the tech sector, and specifically the chip sector all year, and that's been NVIDIA. Ticker symbol NVDA. This stock has been on a tear for the last year and some change, up a couple 100% just in the last 6 months. Stock's trading at 103.30. UBS came out, raised its target after the CES. That's the Consumer Electronics Show. NVIDIA presented there. Real positive on this stock. Stock's up $1.56 on this news today, or 1.53%. So what are we looking at here? Well, over the next 7 days, the options are pricing in the potential for the stock to be in a $5 range, either at 108 or getting as low as 98. You're seeing a 14-day range of 733, and you're seeing a 161-day range of 28. To put that in context, they're pricing in the potential for that this stock could be in a range of between basically 132, 131, all the way down to roughly right around, let's say, $80. 75, between $75 and $80. Now that's quite a large range for the next 6 months. The implied volatility right now is being run at its highest level, which makes sense. This is a stock that has been on a complete tear. It's at 90%. So there's a heightened sense of expectation that there could be violent moves either up or down. And we're seeing the stocks up $1.56 today alone. Critical levels that you're going to want to watch if this upside trend is going to continue is 102.60. A break of 102.60 is going to put the short-term trend into question. Doesn't break the trend, but it's going to put it into question. $90.60, that's going to be the level that institutions are going to look at. And if you start to see that the stock goes through 90.60 and it does with volume, that means that it's lost favor with institutions. And then 61.20. 61.20 is the long-term 200-day moving average. That's the support level. That's where you would see a complete trend shift if it breaks down below that, especially with some conviction. So now that we've taken a look at a financial, a tech, let's take a look at one last, which is a drug stock. And it's Teva Pharmaceuticals. There was a downgrade by Maxim Holdings Group. Target was lowered to $41. Now, they're lowering their target after the stock is basically 5% away from its 52-week high. I look at that with a grain of salt. Teva is trading at $35.03, down $2.93, or around 7.7%. Now, the options are pricing in over the next 7 days that this stock could continue to have a $1.40 range, either up or down. The 14-day range is right around $1.90. And then the 6-month range is now $6.64. So you could see the stock as high as back up over 42 or as low as being down around 28. Now the implied volatility rank right now is at 84%. That makes sense. Guess what? We just had a downgrade. There's a lot of volatility. The stock is down 7%. So volatility's increased. There's a heightened expectation of violent moves. But the options are pricing in some pretty significant ranges. You're talking about anywhere between 7 and 17% ranges between now and the next 6 months. Critical levels that you're going to want to watch. If this trend is going to continue to the upside and gain some traction, and the bears haven't completely taken over in this stock, it's going to have to retake 38.60 in the short term. Then it's going to have to take 38.30 over if you're going to see institutions feeling better about their support of Teva. And then 48.40, that's the long-term resistance. This has been in a bearish trend. We're going to watch this one closely. All right, folks, that's it for Tech Talk, where we've married charts, technical analysis. I've given you a lot of transparency on how you could look at these stocks. And if you ever want to learn about the methodology of how we do this, we're going to start putting out some education in the premium section. So keep an eye on that. Till then, we will see you at 4:30 Eastern time for the closing bell here at MarketStream.live. Have a great day, everybody, and we'll talk to you soon.